So now the key thing is, let me share with you 4 factors that work against the option traders. And I'm not very sure whether the option traders know or whether they know, right? But they felt that it's worth the risk. Yep. Or they do not know because someone didn't tell them. Now, let me share with you why in 2001 why I lost my money and I tell myself never to do option trade again. But again, it's your money. Yeah, I'm just sharing with you my experience. I let you decide what you wanted to do. Yeah, what you want to do. Now, there are 4 factors that work against the option trade. The first one is this thing called the spread. Now, let's go back to this bearish goal, right? You know, some people teach, long-term call. Yeah. Now, do you see there's a spread over here? Spread over here. Now, if you, later on, when I log inside the TD Ameritrade account, right? When I hover my mouse over here, right? Automatically, there will be a small word that says buy. So, in other words, if you want to buy options and you try to type in 2.8, it will not work. It will not work. Your order will be filled immediately when it's 2.91. Yeah. So in other words, if you buy options immediately tonight, 2.91, and you want to sell instantaneously in 1 second, right? You can only buy at 2.91 and sell at 2.80. Okay. You cannot buy at 2.91 and sell at 2.91 because the orders will not be filled. Yeah, the orders will not be filled. Yeah. So in other words, before you even make money, you already lose money because you buy at 2.91, you sell at 2.80, you immediately lose money, right? So number 1, short option traders, before they make money, they already lose money. So that's point number 1 because of this thing called a spread. And the second thing is, remember, the platform will charge you a commission unless you are using a commission-free platform. Yeah. For example, for TD Ameritrade, right, they charge you 70 cents per contract. So in this case, right, not only you lose the spread, you already lose the 70%. Yeah. So in other words, because of this spread, this one work against the option trader. So this one. You want to make money, but there's a spread. Okay, so this one. And the second thing, right, there's this thing called time decay. Now remember, when you buy the call option, whether it's 300 days, 200 days, yeah, you're buying a ticking time bomb. Yeah. So in other words, in order for you to take this time bomb and toss it to someone else, the share price must rise based on what you have predicted. But the key thing is, who can predict share price in the short run? Whether is it 1 month, 2 months, 1 year, no one can, including Warren Buffett. Yeah. But let's assume that you have some special power. So you buy this thing, the time bomb, you can see the wick, right, is burning. You know, leaving behind 200 days, 199 days, and so on. And then you have to find someone and toss it over. Yep. So the time is working against you. And as this time is ticking, the premium that you are paid, right, become lesser and lesser. So in other words, you want to sell to someone, like, it become more and more worthless. Yeah. And the worst case is during the last month, the premium, right, will drop exponentially. And sometimes people describe this, right, as a waterfall. Yeah. Hi, this is Cayden. Remember to click on the subscribe button and turn on the notification to be notified of our future training videos. And then sometimes option trader will say, oh yeah, when you buy call option or put option, never buy a 1 month, you must buy more. And when they say they buy more, because if you might buy more, the option premium decay almost linearly. And it's only during the last month and it decay exponentially. But in short, the time bomb, work against you. So spread work against you, time bomb work against you before you need to toss it to someone. Now, next one is when you buy a piece of paper, you're buying just an option, a piece of paper, a promise. Yeah, you're not owning the company yet. So in other words, you own nothing. And because you own nothing, there's no dividend, there's nothing. Nobody cares about you. Yeah. So number 3, there's no dividend. Now, number 4, there is a psychological factor which is very hard to explain. Is like what I've said. Just because you make 10%, right? Yeah, using $1,000 doesn't mean that you'll be able to make 10% in $100,000, because human beings, when they gamble, right, as you put a higher stake, you feel differently. Yeah. So these are the 4 things that work against the option buyer. Now, on the other hand, if you're the option seller, nothing. You write, you sell, you take the money, you run away, you continue your life. There's nothing against you. Yep, there's nothing against you, because all the factors is all against the option buyer. But again, life is all about choices. If people like to feel good getting a 3%, which is absolutely fine because it's their money, right? Yep. So this is something that I want to explain why option traders want to be option traders because they are given the impression that the capital outlay is small. This one. Yeah, and they are given the impression that they can make a lot of money, 23% versus us. Now, bearing in mind that it's always a risk reward. Yeah, whether will you bet your entire life's savings 100% into getting 23%. Now, if your answer is yes, please do it. If your answer is no, then you can choose to be option seller. Okay, so this one. Now, just now I talked about two strategies, right? Yeah, so what are other types of option strategies that option traders use? In case you find, oh, buying put option, buying call option is such a boring strategy. So here it goes. Now, option trading strategy is really interesting and fanciful because it really has nice names. Let me give you an example of option trading names, which is definitely much more fanciful as compared to the term value investing. Okay, so what are the fanciful names? Now, there are strategies called Iron Condor. Yeah, I mean, if you conduct a class, right, hey, I'm going to teach you Iron Condor. I mean, versus Cayden's value investing. I mean, goodness. Yeah, I think Iron Condor sounds nicer, right? There are also strategies called butterfly spread. Yeah, you can see the butterfly spreading the wings. It's so nice, right? Yeah. So right now it's October and we know that December is coming, right? There's even a strategy that's named after Christmas tree. It's called a Christmas tree spread. Okay? I mean, who's going to learn value investing when you can learn Iron Condor, butterfly spread, and Christmas tree spread, right? When value investing is so boring. But it's okay, right? It's okay.